Steve Forbes with us right now, what he makes of this sort of gas tax holiday. Steve, always good seeing you. I caught Art Laffer on Fox News early this morning saying if he were advising Joe Biden, of course, he'd advise him to drill more and all that, but he'd say, you know, this would help the American people. He'd recommend it, giving a gas tax holiday when they need it right now. What do you think?
Anything would help. The American people need some kind of relief, though unfortunately the administration, and Art's right on this, has more than raised the price of a gallon of gasoline, probably $1.50, $2 just by really harming production here in the United States. It's astonishing that he's now going to go to Saudi Arabia and he's going to learn that OPEC does not have that much spare capacity. So by killing that pipeline, the Keystone Pipeline, early in his administration, first day, deprived us of 800,000 barrels of oil from Canada, a friendly country, to the United States. They've done everything possible and continuing to do everything possible to get in the way of improving refinery capacity, building new refineries, permitting a leasing on federal lands, everything that would help the situation. They're doing the opposite. Rhetoric one thing, actions quite another.
You know, Democrats always counter, well, the Keystone thing wasn't off the ground. But as you and I know, oil trades on the markets, much like stocks. And the thought that supply was going to be hindered amid strong demand, the markets read quite correctly that that was going to lift up the price. And it did. And that was long before the first Russian soldiers set foot anywhere near Ukraine. Having said that, back to this gas tax holiday. Wouldn't that actually make the situation potentially worse? Wouldn't it drive up demand for gasoline and then raise the price as a result?
I love that pun, drive it up. No, I think a lot of people are now giving very serious consideration to not doing a lot of driving this summer precisely because of the high price. So the idea is if you want a low price, then you have to accept the consequences. If you want a high price and have people have their budgets stretched, then you're going to face the consequences of a more likely recession. Millions of households are already in a recession as they're going through their savings. Prices are going up faster than their wages, and now you're starting to see some companies now engage in layoffs. So the clouds are darkening. So any relief you can provide, this administration will reduce a tax, I would grab it. It's historic. Every tax they see, they want to raise. So tax cut, even a little one like the gas tax, grab it, because you don't get much from this administration on tax relief.
I wonder, you mentioned recession, and you know, it's all over the map as to when one will be coming, and some say we're in one now. Where are you on this?
We're in a mild recession right now. Mild, there's no such thing. But you had the down first quarter. We're going to have a barely up second quarter, sluggish third and fourth quarters. But the thing is the Fed raises interest rates arbitrarily. You're already starting to see an impact on the housing market. People are going to be cutting back their budgets as they have to readjust to these higher mortgage rates. Most of them have floating mortgage rates. So there's going to be a downturn. And then the question becomes, will the Federal Reserve buckle under the pressure of a downward economy and upcoming crisis overseas? The Japanese yen is about to buckle. That's going to have international ramifications that this administration, I don't think, is even paying attention to. So when you have a sluggish U.S. economy, rising interest rates, there's going to be damage done to companies and to foreign currencies, and those are going to play out in an adverse way. And I am afraid the Federal Reserve is going to say, uh-oh, we're going to retreat.
Real quickly, the argument is the markets can't turn around until the Federal Reserve starts cutting rates. That tends to be the history. Not all the time, but most of the time. That could be quite a while.
Yes, it could. And unfortunately, Neil, the Federal Reserve believes the way you fight inflation is by making people poor, suppressing the economy instead of stabilizing the dollar, which they sort of did in the late 80s and early 1990s with great moderation, was very effective. They should go back to what works instead of thinking making people poor is a way to bring prices down. Yes, it'll bring prices down as businesses going out of business sales. Yeah, prices get cut, but that's not the way to really fight inflation. Stable dollar's the way to go.
Got it. Steve, thank you very much. Sorry to jump on you. This is Steve Forbes handling all of that.